Hey guys, what's up? It's AB Trades, and I run a YouTube channel where I teach people how to day trade options. I'm on day 6 of the 7-day strategy release. So there are 7 strategies that I use to day trade the market. These 7 strategies are huge. People charge money to show you how these strategies work and what they are. I'm giving them away completely free. So please like the video, please comment if you are liking all the content, and subscribe and turn on those post notifications so you can get notified of future videos, because I still have one more strategy left to reveal to y'all. If you want to view the previous videos, just go back on the channel. But for now, let's go to the 6th strategy, which is the Heikin Ashi moving average strategy. This is less of a short-term play. The other strategies that I've been mentioning have been more of an intraday time frame, right? This will still can be used on an intraday time frame, but is also used on a larger time frame, more for swing trading. You're going to take out those monthly contracts that have less theta, and you're going to mainly swing trade. Now, how do we get to this Heikin Ashi moving average strategy? First, you're going to go to, on whatever platform you're using, you're going to go to the style of the candles. You're going to pick, on the candle type, you're going to pick Heikin Ashi. And it's going to look a little weird for a sec, but just follow me. Then you're going to go to your N indicators, and you're going to go to, you can use any moving average. You can use a simple, you can use exponential. Personally, I like the exponential, and I like it set at, I think it's 12. 12, is that right? Yeah, that's right. We'll see. We can adjust it if needed. So as you can see, Heikin Ashi is a trend following candles. I just have to show y'all. So the way that Heikin Ashi works, I really want to zoom in, is it takes the movement of the candle, right? And the bottom of the candle is the mid price between the open and the close of the previous candle, right? So the open and the close of the previous candle is right here. So the bottom of the next candle is right here. So basically it's just showing in progression to the previous candles, are we still continuing the same trend? So Heikin Ashi is used for trend following. Therefore, one, it does not work on consolidation days, and it works best on a longer time frame to see the overall trend of the market. Alright, so if we can see here, obviously the overall trend on Amazon today was green, bullish, right? And we can see that we are being supported by our 12-period exponential moving average. So let me show you how this works. So let's see, where can we use it to its full advantage? So I would use it on a 5-minute chart, or more preferably a 15-minute chart. And I think that for using this, we're not going to be able to use a 12. I would move it up to 20. Let's move it up to 20. Again, adjust, play around. There's no perfect way to do it, and it all just depends on how you see success in doing it. So if you can see here, we're basically just trading moving average crossovers, right? That's all we're doing on a trend following system. So if we want to go long on a swing trade, you want to make sure that the candles are green and they're showing a trending upward and it's above the EMA. Basically about it, right? So if we can see here, we're coming in, and on the day we are pushing above and we're holding this 20-period moving average EMA. We're showing green. We enter above pre-market highs, right? And we're going to swing trade it, and we're going to hold it. All right, a nice hold play. It's great. We start to break below, and then we're really starting to hold below. So right, you enter and you trade to the downside. Let me move it out further. Let's see, what time frame can we pick up? Let's pick up a 30-minute, and let's go out to 90 days. Alright, now you can really see it start to play out here. You see where all the red is? That's where you enter for a put. You see where all the green is? That's where you enter it. It just makes trend following a lot easier. But you're also trading with the moving average crossover. So as you can see here, it's best for catching dip bounces. So we know that 15,000 is the support for Amazon. We see it start to bounce. It crosses above the EMA. And then it's still holding the green trend. So we trade it to the upside, right? It's that simple. and then when we start to reverse, it cracks below, and we trade it down to the downside. Let's see it on spot. So if you can see here, we zoom in, we know that we have a double bottom support here. We cross below it with green candles, and we hold it and we trade it up. We know there's a resistance here at 274.50. It crosses below the EMA, you trade it to the downside. So it's best to play on bounces where you know that there's going to be a previous support or a previous resistance in play, and you just trade it for the long run. Now when you're trading long runs, make sure you are at least 45 days out in expiration for your options contract. Again, if that doesn't make sense, this is the 6th video in the 7 days, and after these 7 days of strategy, I'm going to go specifically in depth into options and explaining how that works. So if this does not make sense, since you've 45 days out from expiration, so understand more videos coming soon. So please make sure to subscribe and turn on those alerts. Alright guys, I hope that makes sense, and I hope you can learn to take advantage of writing trends, longer term trends, intraday trends using Heikin Ashi. It's a very good system if you just want to test with the EMA links and simple moving average links. This is how I traded Forex a few times, because the Heikin Ashi, you just find the trend and you trade the trend. The trend is always your friend. Alright guys, I hope you learned something, and see y'all tomorrow for the 7th strategy.